Hey, good morning, everybody. Today is Thursday, September 17th, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. Markets rallied, finishing near their highs for the day on heavier but below average trading volume yesterday. The heavier volume gave us accumulation days on both the NASDAQ and the S&P 500. An accumulation day is a sign of institutional buying. It's this institutional buying that we, as momentum traders, are trying to identify and get in front of. The advance yesterday pushed the NASDAQ composite more than 1% above its upwardly sloping 21-day exponential moving average and its 10-day simple moving average. That's our definition of a buy signal for a market timing model. The buy signal on the NASDAQ combined with the secondary aggressive buy signal gives us our most aggressive market timing indication, a margin signal. What this means is most traders should begin to carefully work their way back toward fully invested, liquidating any contra ETFs on market weakness. Our most aggressive traders can begin to selectively utilize margin to leverage their portfolios. It should be noted that while the NASDAQ has gone to a margin signal, the S&P 500 remains on a primary sell signal with a secondary aggressive buy. Our most conservative traders may want to wait for the S&P to confirm the NASDAQ. Since O'Neill confirmed the current rally on September 8th, the S&P 500 and the NASDAQ have had only one distribution day each. The recent market volatility seems to be abating, and we're beginning to see some constructive bases in leading stocks. That's bullish. That noted, with the major averages having fallen so far below their 200-day moving averages, it's conceivable that this market may retest recent lows. Be careful with any entries and keep your stops in place. Advancing issues bettered decliners by better than 7-2 yesterday. While not looking healthy, the New York Stock Exchange advanced decline line is looking a bit more bullish, having put in a higher low and a higher high since the August 24th market low. New lows continue to better new highs. Large capitalization stocks outperformed small again yesterday, but small caps still continue outperforming on a 10-day moving average basis, which is typical of a bull market. Our market momentum model is indicating recent market momentum is to the upside. Our swing timing model is indicating a neutral condition on the market. The market remains uncertain, but more bullish. We should continue to err on the side of caution. This market could continue to be volatile and prone to whipsaw for a while. Again, our primary market timing signal is a buy, and our secondary indication is a margin signal on the NASDAQ. These signals have not been confirmed by the S&P. Be careful. Okay, what we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market has been over the past week. Over the past 5 days, we've seen factory automation equipment up 23.8%. The trucking index up 6.2%. Non-residential building construction up 6.1%. Beverages up 5.7%. And rounding out the top 5 is precious metals mining up 5.7%. Let's take a look at what the NASDAQ is up to. NASDAQ yesterday was up 28.72 points, or 0.59%. It closed at 48.89, closed right at the top of its daily trading range, which is bullish. And more importantly, it closed at least 1% above its 21-day exponential moving average, We show the 21-day exponential moving average here in pink. We show a 10-day simple moving average here in green. The NASDAQ yesterday closed 1% above its upwardly sloping 21-day exponential moving average and its upwardly sloping 10-day simple moving average. This is our definition of a buy signal on the market. And so as of yesterday, the NASDAQ has gone to a buy signal. And because we were already on an aggressive buy signal as a secondary signal, that buy signal gives us a secondary signal of margin, indicating that aggressive traders can begin to leverage up their portfolios utilizing margin. Yesterday, trading volume was higher than the prior day, giving us an accumulation day, but was still below average. Market right now is bracketed by support down here in the 42.92 area and resistance up here in the 4900 range. Note we are right at that resistance level. In addition, this black line right here is a 200-day moving average. The NASDAQ should get some resistance from the 4900 area. It should get some significant resistance from this 200-day moving average. Watch to see if we can recapture both of those levels. Let's take a look at the S&P 500. The S&P yesterday was up 17.22 points, or 0.87%. It closed at 1995, blocking at resistance right here in the 1993 area. We actually took out that resistance, but not very convincingly yesterday. Trading volume was higher than the prior day, giving us an accumulation day. It also traded a little bit below average daily. For you followers of William O'Neill, we are in an uptrend under pressure. The market confirmed the uptrend on September 8th. Right now, the NASDAQ is bracketed by support down here in the 1867 area and resistance, as we mentioned before, in the 1993 range. We'll see if the S&P 500 can convincingly take out that 1993 range. Right now, the S&P 500 remains on a sell signal with a secondary signal of aggressive buy. With the NASDAQ on a buy signal, conservative investors may want to wait for the S&P 500 to also confirm that buy signal. I'd like to take a quick look at 4 stocks here. First, let's take a look at Inphi Corp. Inphi designs analog multiplexers, encoders, amplifiers, and memory buffers for servers, routers, and storage equipment. The stock has been putting in this 3rd stage base, which is a late stage base, but it gets an 80% checklist rating, which is a very high checklist rating. We have a pivot point of $27.11. Yesterday, Inphi broke above this trend line on higher trading volume than any down day in the past 10 trading sessions, which is the definition of a pocket pivot. Aggressive traders, actually any traders, because we're on a buy signal, can buy Inphi here on a move above that trend line, or more conservative traders may want to wait for the pivot point of $27.11. Next we have D.R. Horton. D.R. Horton builds single-family detached homes for first-time and move-up home buyers in 27 states and 79 U.S. metropolitan markets. The stock right now is putting in this first stage base-on-base formation. Notice we had this cup and handle base right here that we broke out of and then immediately went into setting up a second base. D.R. Horton gets a 68% checklist rating, has a pivot point of $32.37, and for aggressive traders that may want a little bit earlier entry, we have this trend line. A break above that trend line may provide a good entry in anticipation of the breakout in the 32.37 area. For you bottom fishers, we have a couple of stocks that I want to take a look at. First is Virgin American. Virgin American is a low-cost airline offering premium services with scheduled air travel in the continental United States and Mexico. The stock is forming this first stage base and actually tried to break out of that base yesterday. The pivot point is $36.07. I'm sorry, the pivot point is $36.70. Virgin American broke above this trend line on higher trading volume than any down day in the past 10 trading sessions, giving us a pocket pivot. Virgin American gets a 76% checklist rating and can be bought by aggressive traders, more conservative traders here on the break above the pivot point at 36.70. Finally, Store Capital Corp is a real estate investment trust that owns 947 single-tenant commercial real estate properties in 46 states operated under long-term net leases. For you dividend traders, the stock has a 5.1% dividend yield. Right now it's working on a first stage base with a pivot point in the $24.06 area. Gets a 72% checklist rating and has this trend line. A break above that trend line may provide a good early entry point before the $24.06 pivot. Before we go, I want to throw on a 50-day moving average on this stock. And the reason that I want to do that is because yesterday Store Capital broke above that 50-day moving average on heavier trading volume than any down day in the past 10 trading sessions. It's hard to see here, but it really was heavier trading volume, giving us a pocket pivot. And so very aggressive traders can buy Store Capital here on that pocket pivot. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.